everyone. So today we will talk about credit. From the question number one, define and explain thoroughly what is credit. Credit is a financial agreement where a person or business borrows money, goods, or services with a promise to pay for them later. It is based on the trust between the lender and the borrower. When a lender gives credit, the borrower must return the amount borrowed. Mostly it has an interest, which is the cost of borrowing the money. Having a good credit means a borrower has a record of paying the debts on time, which keeps in getting loans for big purchases like a house or a car. Credit makes it possible for people and businesses to obtain or purchase the things they need before they have enough money or cash. But it also creates a debt obligation that must be repaid later. Question number two. Describe the credit economy. A credit economy is an economic system where a lot of people use borrowed money to buy goods, invest in businesses, or meet their daily needs. Credit becomes the foundation of spending because their payments are made of time instead of using a full cash. This system helps the economic growth by increasing consumption and investment. However, it also creates debt that must be managed carefully to avoid financial problems. Number three, enumerate and explain the advantages and disadvantages of the credit economy. The advantages of credit economy. First is credit reduces the need for metal money because banks create credit without using a gold or coins. Next is credit allows new firms to grow faster despite high risks in the early stage. Next is credit makes it easier to raise large capital, reduce production costs, and improve product quality. Lastly is bank transfer the savings into productive use which increases the economic activity. Now, the disadvantage of credit economy. First is too much borrowing creates heavy repayment pressure on individuals and businesses. Next is credit may be used for non-productive purposes, which slows or weakens the economic growth. Next is overexpansion of credit causes inflation due to increase in money supply. Next is credit failures can create financial instability when the borrowers cannot repay the loans. Lastly, the dependence on credit reduces saving habits and financial discipline. Number four, enumerate and explain the foundation of credit. First is assistance. The laws helps to protect both lenders and borrowers from unfair practices. It makes lending safe and fair, so people trust the system. Second is confidence. Lenders trust borrowers to pay back the money or use collateral like jewelry. Without trust, no one would lend. So, confidence keeps the credit working. Third is facilities. Systems like credit records and legal rules help to manage the loans. It provides structure and makes sure credit agreements are followed. Lastly is the stability of money. Money should keep its value over time. Stable money protects lenders and borrowers that encourages more lending. Next is number five. Enumerate and explain the basic characteristics of credit. Basic characteristics of credit are bipartite in character, fiduciary, security, and financial in nature. First is the bipartite in character. Two people are involved. One gives, one promises to pay. Credit needs both a lender and a borrower. Second is fiduciary. People trust each other to pay back. Without trust, no one would lend. Third is security. Payment or return happens later. Credit is about using something now and paying later. Lastly, is the financial in nature. Credit has a value like money or goods. Credit must involve something that can be used or that can be measured or worth something. Number six. What is the advantage and disadvantages of credit cards. Advantages of credit cards. First is purchase power and ease of purchase. Credit cards let you buy things without carrying cash. It is easier and safer than carrying a lot of money. Second is protection of purchase. Credit cards can help if your items are lost, damaged, or stolen. They provide a proof of purchase and sometimes it is insurance. Next is building a credit line. Using a credit cards helps you to build a good credit history. Good credit helps when applying for loans, rentals, or jobs. Next is emergencies. Credit cards can help to be used in urgent situations. They help you pay for unexpected costs when you don't have a cash. Next is credit card benefits. Some cards give discounts, rewards, or insurance. You can get an extra advantages while using the card wisely. Disadvantages of credit cards. First is high interest rates. Credit cards can charge very high interest if balances are not paid on time. This makes the debt grow quickly and harder to manage. Next is overspending. Credit cards can encourage spending more than available funds. It may lead to unnecessary purchases and financial strain. Next is debt risk. Careless use of credit cards can result in large debts. Missed, missed or partial payments increase the total amount owed. Next is fees and charges. Some credit cards have annual fees, late fees, or extra charges. These fees add up and increase overall cost. Next is credit score impact. Late payments or high balances can lower a credit score. A lower score makes it harder to borrow in the future. Number 7. Enumerate and explain the classifications of credit. Credit can be classified on the basis of time, purpose, security, lenders, and borrowers. First is time. This classification depends on how long the borrower has to repay the loan. Next is purpose. This classification depends on the reason why the loan is taken or what will be used for. Next is security. This classification depends on whether the borrower gives something valuable as a guarantee for the loan. Next is lenders. The classification depends who provides or gives the loan to the borrower. Lastly, the borrowers. This classification depends on who takes or receives the loan. That's all. Thank you.